Boom shakalaka, emergency Fed meeting. If this doesn't make a case for the bottom, I don't know what will. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video with a lot of very interesting charts for Bitcoin and cryptocurrencies, including why this recent V-shaped recovery is likely the bottom. Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us on Twitter at @TheCryptoLove. Push that like button. Now today, fear and greed back up into neutral at 49. Explosive growth since yesterday, and fear at 33, back up to 49 as the overall market up 9% today. Bitcoin at 22,437, Ethereum at 1605, BNB at 305, XRP 36 cents, Cardano 33 cents, Polygon $1.14, and Dogecoin 7 cents. And Bitcoin right now having an explosive V-shaped recovery off of levels that we predicted back when Bitcoin was in this wedge above the yellow line. Pretty spectacular. But this V-shaped recovery is actually quite a bullish indicator as long as it holds over the next few days. And we'll be going over why a little bit later in the episode. Now, speculation as to what caused this. Some people might say, how could that happen? All these banks are collapsing all over the world. Well, we have an emergency Fed meeting on Monday. Should be a few short hours after this video is released. On Monday at 11:30 a.m. held under expedited procedures set forth according to this, that, and the other matters to be concerned, whatever. They're going to be talking about banks collapsing and what to do about it. Now, just to put it in perspective, we have Silicon Valley Bank collapse is the second largest federally insured bank failure in U.S. history based on total assets. Now we can see right here, the largest would be Washington Mutual Bank back in 2008, $307 billion. And you're like, how come FTX isn't on there? Well, the key words are federally insured bank. FTX, not insured by anybody. And some of these other banks, maybe not insured. But if we take a look over the history of the banks, there's a lot of monkey business going on in the banks with Lehman Brothers, Bear Stearns, FTX, Silicon Valley Bank, Signature Bank now. What other banks are going to collapse before things turn around? And why on earth is Bitcoin responding the way that it did? As a matter of fact, with the pre-Fed emergency meeting volatility, we saw Bitcoin go from about 20,000 and a half all the way up to 22,000 plus. Now this is quite spectacular when you consider exactly 3 years ago, Bitcoin did something the exact opposite direction. This was the Black Swan COVID red candle where it went from 8,000 down to about 4,200. We just did pretty much the exact opposite thing exactly 3 days or 3 years later. Pretty spectacular for Bitcoin. But this V-shaped recovery could be very, very good for Bitcoin. On this Bitcoin chart, the price action in two rectangular boxes looking very similar. This could be a bottom pattern, but in a smaller scale. Now, what we have here, we had a bit of a larger U-shaped bottom back in 2019. You guys remember that. And then we had the COVID V-shaped recovery, very quick recovery, showing that prices could not stay down at those levels. Now, those levels were not the same, but they were in the same ballpark, as you can see here. Again, larger bottom down here, $15,000 bottom, and then we had the sharp V-shaped recovery. If this holds, this could be very, very good for Bitcoin. Not the recent prices we saw being the bottom, but this just kind of hammering in that the bottom has already been set. And if you want a lot more reasons why the bottom has already been set, you could watch yesterday's video where we went over all of them despite people declaring the sky is falling. Now, one more case for a pullback before blast off would be if we take a look back at 2016, where we had increase in price and then a sharp drop pullback before that basically set the bottom and price took off. Well, once again, price retracement before potentially price taking off. Right now, things are still looking good on longer term frame Heikin Ashi candles, which has always declared the bottom is in after a long, prolonged period of red turning to green. This has happened every single bottom has been the turnaround moment. We still have green still having bullish momentum, especially after the price rebound of today. But the opportunity to get Bitcoin and an insane discount is running out. If we take a look at the short-term holder liveliness cost basis versus long-term holder liveliness cost basis, you can see the bottoms are in this red area. And you can see it is getting pretty close to leaving that red area to where it might be the last moment to get Bitcoin and cryptocurrencies at a discount. Because even though men lie, and even though women lie, and even though I won't say who lies more, the charts don't lie. And if we take a look at this chart, confident that some good news would pump the market. If we zoom in here, and this is just comparing the current market with the previous market, so you can see very, very similar in terms of resistance, very, very similar in terms of the 30 MA. Well, if we zoom in where we are right now, this bounce was exactly on the top of previous resistance, now becoming support, also the 30 MA, exactly what happened previously. Could be suggesting the same thing happening once again. And just to echo it once more, rejection, rejection, bounce. Similar to what we saw in 2014, 2017, rejection, rejection, bounce, and then blast off. That's what happens after the bounce. So that's all for today's episode. If you did enjoy it, push that like button. I'll catch you guys later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.